Whereas something like Bitcoin, because it's actually the bare asset that you can hold, it's harder to get rug pulled. Now, there still are questions around the long-term network. Is it gonna remain, say, resistant to 51% censorship attacks by miners? What happens if governments do try to ban it? We do have some, kind of points on that. For example, in Nigeria, it's not the strongest currency in the world. A lot of people prefer dollars. They prefer Bitcoin. They prefer stable coins, whatever the case may be. And so what Nigeria did was they didn't ban it, but they cut it off from their fiat system. They said, okay, banks can't send money to crypto exchanges. Yeah. And yet you still have a very, very high adoption of Bitcoin and other digital assets like stable coins in Nigeria.
Money is one of the oldest and most fundamental concepts in human history. From the earliest days of human civilization, people have sought out ways to store and exchange value. From seashells and beads to gold and paper currency, we had always been looking for something that can be used as a medium of exchange, a store of value, and a unit of account. But in recent years, a new contender has emerged in the world of money: Bitcoin. Lyn Alden, a renowned economist and founder of Lyn Alden Investment Strategy, has been a vocal proponent of the idea that Bitcoin is a form of money and a medium of exchange. Despite the controversies and scandals that have plagued the cryptocurrency industry in recent times, Alden maintains that Bitcoin has the potential to be widely accepted as a form of money. One of the main arguments against the idea that Bitcoin is truly money is its lack of wide acceptance as a medium of exchange. Many critics argue that for something to be considered money, it must be easily and widely accepted in exchange, and that in most places, Bitcoin is not yet at that level of acceptability. However, Alden counters this argument by pointing out that the acceptance of any new form of money takes time, and that Bitcoin is on the rise in terms of acceptability and its salability compared to other non-fiat currencies. Alden also points out that the definition of money is not a fixed one, and that it is more like a spectrum where different forms of money have varying degrees of moneyness. For example, a Picasso painting may be a store of value, but is not liquid or fungible, making it a poor form of money. In contrast, Bitcoin is a form of digital asset that is designed in such a way that it is liquid, fungible, and can be easily traded as a store of value. Another argument against Bitcoin being considered money is its lack of intrinsic value. Critics argue that the value of Bitcoin is not rooted in any tangible assets and is instead determined by speculative market forces. Alden counters this argument by pointing out that the value of any asset, including traditional forms of money like gold, is ultimately determined by market forces. In the case of Bitcoin, its value is determined by the supply and demand of the market, just like any other asset. Get ready to discover the truth about Bitcoin as we dive into this exclusive video featuring Lyn Alden, a leading economist and advocate for the cryptocurrency. Join us as Lyn debunks the myths and misconceptions surrounding Bitcoin and explains why it's the future of money. Don't miss out, hit that like button, subscribe, and join the conversation with your comments.
You don't necessarily have to have a Boolean outcome, right? So something is not necessarily money or not money. It's property of moneyness. And if we, for example, if we rank countries or rank currencies by their moneyness, right? So let's say we take a given country's currency. It's a 10 out of 10 in that country, but it's like a 1 out of 10 in most other countries. Whereas something like Bitcoin is like maybe a 3 out of 10 in a bunch of different countries, right? So it doesn't have it as dense of an epicenter as any of those monies in their own kind of artificial monopoly, but it actually has a broader reach of salability, higher moneyness outside of that, kind of artificially enforced density. Another way to kind of phrase it is if you have like an arcade, and there's an arcade token, and that token enables you to play games, maybe get meals, like, one of those like adult arcades, like where there's like, it's not like a kiddie arcade, there's like a bowling, there's entertainment, casino chips, for example. Those are something that is like money-like in a very small area, but then once you leave that establishment, it's terrible money. And nation-state money is essentially the same thing, but on a far grander scale. And so that's why I view that focusing on the medium of exchange asset capability is important, but we have to then separate, are we focusing on density in one area versus almost no density elsewhere? Or are we focusing something that's global and that doesn't have that density, but is still a global form of money in that sense?
Okay. Well, I want to agree with all that Lyn just said this time, if I may. I do think, first of all, that salability is what we're talking about. And the question is, where's the cutoff? When is something saleable enough to qualify as money? And that's not a hard, fast line. And it's a line that you draw differently for different contexts. Like the world salability there are very few things that qualify as money internationally, and among them, Bitcoin rates relatively high. I think that that's fair.
I think one of the key innovations, or one of the key things that Bitcoin brings to the table, is that the actual bearer asset can move around quickly rather than just a claim on that asset. And I think one of the downsides, so I don't agree with anything you said, but the challenge is that when you have something that relies on abstraction in order to move around efficiently, the challenge there is it's easy to break that promise, break that peg, break that redeemability. And that's what we saw happen with literally every jurisdiction in the world. That you had the system, and I've argued that it's essentially that speed mismatch between commerce and the underlying settlement that allowed for governments and banks to be able to arbitrage that speed difference and eventually be able to break it. And when they broke it, and they had these fiat-only systems, the fact that if you could just teleport gold around and between people like mentally, right? It'd be really hard for fiat currencies to develop because what is their possible advantage over gold? And instead, their advantage was they were this big interlinked global ledger that could move around, and gold couldn't keep up. And so gold got rendered to just being a savings asset, for the most part, and a still a saleable, global asset, but not that quick medium of exchange that you have with fiat. And I think what Bitcoin essentially does is it says, okay, here's something that moves at the speed of fiat, but has the scarcity of gold, at least in the supply inflation rate sense. And so you have, I think, a reasonable shot at something where people can actually hold on to the underlying. They can self-custody the underlying. They can move around the underlying globally without relying on that counterparty trust.
Alden points out that the global economy is constantly evolving and that new forms of money will emerge as a result. Bitcoin, with its decentralized nature, has the potential to be a global currency that is not controlled by any central authority. This gives it a level of security and autonomy that is not found in traditional forms of money. In conclusion, Lyn Alden's ideas about Bitcoin being a form of money and a medium of exchange may be met with skepticism and criticism from some quarters. However, her arguments are rooted in sound economic principles and a deep understanding of the nature of money. As the world of cryptocurrency continues to evolve, it's important for all of us to stay informed and continue to educate ourselves about this exciting but complex topic. Bitcoin may not be considered a traditional form of money, but its properties of being liquid and bare assets makes it a valuable addition to the economy. And given that it's decentralized, it has the potential to change the monetary system as we know it. It's important to note that the economy is constantly evolving and new forms of money will emerge as a result. As we move forward, it will be interesting to see how the acceptance and use of Bitcoin develops in the coming years. As Lyn Alden expertly lays out the case for Bitcoin as a viable form of money, the question on everyone's mind is clear. Is this the future of finance? Join the conversation and share your thoughts in the comment section below. Don't forget to like this video, subscribe, and turn on notifications for more informative content. Thanks for watching.